It's a real pleasure to welcome onto stage Alex Dunn, Director of Innovation and Strategic Growth Initiatives at Visa Direct, and Lee McNabb, Head of Group Payment Strategy at NatWest. The future of money in 20 seconds flat. Gentlemen, the time starts now.
20 seconds or 20 minutes? I'll take 20 seconds. It might be hard to answer in that time.
Hi everyone, thanks so much Fintech Live for having us. Lee, before we do intros, what's the meaning of life? No, sorry, what were you going to answer?
No. The meaning of life is gathering together and sharing thoughts with each other.
Okay, good. So we'll quickly do intros, I'll start.
Sure.
I'm Alex Dunn, Director of Visa Direct and responsible for growing the network beyond Visa's traditional card rails. And I'm involved in a number of the industry experimentation initiatives, which hopefully we'll get to talk about, and previously at the Bank of England before that. So,
afternoon everyone, thank you for having me. Thank you for Alex and Visa for asking me to come on stage with them today. Lee McNabb, my role's actually got a bit bigger in the past few weeks, so not only am I enterprise payment strategy for NatWest, but I am now digital asset strategy and delivery lead for NatWest, which is fun, exciting, challenging. My role kind of takes me across all our franchises and functions. NatWest is a UK bank, but we're a global money mover as well. We have a large retail base, huge C&I base. We're the biggest corporate bank, I think, in the UK. We obviously have a strong relationship with Visa, and can we name the other firm? The MasterCard. We are a dual card house, and we have multiple capabilities across all the value chains of payments. So keen to try and solve the future of money in 20 seconds.
So it's quite a grand ambition, so appreciate that. And we're going to zoom out a bit and talk a bit about the macro context and some of the recent discussions from the Bank of England. And then we'll go through some of the projects, talk a bit about what Visa and NatWest are doing separately and together, and then talk a bit about the payment infrastructure upgrades that are also happening in the UK. So I thought we'd quickly, if we zoom out, I think people might have read Andrew Bailey's FT article last week, which, as I mentioned before, I'm a former Bank of England person. It did signal a bit of a shift in the UK's approach to stablecoins. Obviously, there's been massive growth in the market from US-denominated stablecoins. I think they're about 300 billion now market cap. So it's I'm just interested, Lee, what your perspectives are on that and the broader UK market that's evolving.
So I was at Cybos last week when the article came out. I've been in banking now for about 20 years, in payments over a decade. And I think the article quite nicely summarized the position we're in, where basically no one really has a clue what's going to happen next, to be brutally honest. That's a Lee quote, not a NatWest quote. But I've never in my career in financial services seen such a pivotal moment, not just for kind of payments, but for money in general. Because what we are doing here is talking about money and currency and how different currencies will run on different rails and what those rails will be and whether there is interoperability. I don't think we've ever seen that before. We've seen e-money kind of come and get scale, but it was ultimately on traditional fiat, right? They were just different type of providers. But now it's different types of money, be it stable coins that are very much dollar dominated, be it CBDC, which has kind of got differing views and perspectives, but very much kind of a Euro drive. The ECB want a retail CBDC. We speak to a lot of the European banks. They are committed to it or accepting their fate, shall we say. And then little old Blighty in the middle is sterling's not really a global currency, probably something like 4% of kind of global flow, but UK is still seen as a huge financial hub, a center of innovation, center of fintech investment, etc. And we're trying to work out what we do with our money and how we best move our money on chain. Because I think the future is money on chain. I think the future is tokenized cash that settles with tokenized cap markets and tokenized assets. But how we plot to that future is something that I think is a bit unclear. And we really need us, you get all the market players, all the fintechs in the room, and the regulators to kind of work together to get to whatever the end game is. But that end game has to be beneficial for our customer base, be it a consumer, be it a corporate, be it an enterprise corporate that moves money globally. If we forget the most important thing, which is customer, then we're not doing our jobs very well.
That's great. And as I'm glad you brought up the customer, because often these discussions can be quite theoretical, but how do you think about it really from the NatWest customer point of view? These new forms of money, are you just trying to respond to their demand, or do you think about it differently?
Well, let's be candid, right? A lot of the time, people do not know and do not care about their money. And what I mean by that is, if you asked anyone on the street, they wouldn't know the difference between public and private money. They wouldn't know the difference that if you have cash in your hand, it's actually public central bank money, versus when you put it in your account, it's different. It turns into commercial bank money. No one really knows that, nor do they care. And at an infrastructure level, no one really knows or cares the different rails that exist. Some will, that's probably more than the money bit, and some will. But if I say, what does a standing order run on? What does a direct debit run on? What's the difference between faster payments and backs? People go, what's backs? I don't know what that is. It's just an account-to-account payment, but it takes a bit longer, or it does it in bulk and batch. But our role as a commercial bank is trying to understand, well, where's the customer differentiation? How can you improve what exists now so that the customer is benefiting? It's a tough one though, because if you only thought about, is this going to take customer journey kind of one step up, you'd never do anything. So you do need to challenge yourselves and kind of get out of the kind of maybe banky, risk-minded view that says, actually, is this going to really benefit? And really try and pilot and test and experiment. This is why we're involved in a lot of the industry initiatives, to understand what is a differentiation that you might not consider yet. What is a differentiation that you go, actually, we never really thought of that. I don't think anyone really thought that we'd all be sat on our phones and then we'd all be making payments on our phones only 10, 15 years ago. But all of a sudden now, in the UK, we are wallet dominant, right? And we are card dominant. Obviously, you guys have benefited from that. I think the wallets were the greatest innovation.
We've all benefited.
We've all benefited. But I genuinely think the wallets were the greatest innovation that the card schemes never came up with, but you benefit from. But anyway, we have to look at how is that customer role. And that's customer from our children. We were talking about our kids earlier. What's the future of money for them? Versus our enterprise customers that have 100,000 employees and move money domestically and in every different jurisdiction across the world. They're all different needs.
I'm glad you brought up, the technological innovation of consumers, and we've got a view about the consumerization of institutional payments. So the same ease that people have with their phones in their day-to-day life, WhatsApp, we see that increasingly in their demands from enterprise in terms of speed and resilience and efficiency. Shall we get into the industry initiatives? You mentioned tokenized deposits. There's a big announcement. There was lots of announcements at Sibos.
Yeah.
Shall we do tokenized deposits
We should.
first? So the extension of the regulated liability network. Be great to hear about that project in general and then where you think it's going.
Of course. So back to my kind of geopolitical point around States is very much stablecoin, Euro is CBDC. The UK, where we focus now, and we've been doing so for the past 3 years, is how can we get our commercial bank money that exists now, which is 96% of what moves in the UK, on chain. So how can we get it programmable? How can we get it 24/7? How can we get it so, I mean, I'm not going to sit here and say it's a competitor necessarily to stable coins because there's like unique differences, but how can we get our money into a world that exists? I turned off it. Can you hear me? How can we get our money into a world that exists in a 24/7 DLT-based environment? We've been involved in as Visa have been in the past. RLN is now called GBTD, so the Great Britain Tokenized Deposit. I'm not a marketeer, and I didn't necessarily vote for that, but that's where we are.
Like it.
It's better than a few other acronyms that you can think that involve sterling and tokenized deposit. Well, let's not go there. We, with our 5 peer banks, so Nationwide, Barclays, Lloyds, Santander, HSBC, are looking at how we can build tokenized deposit functionality that is fungible, interoperable. So when I send a NatWest tokenized deposit on chain, it becomes a HSBC token deposit when it gets there as well. I feel like I'm going in and out of audio. Is that right? Can everyone still hear me anyway? It tends to be loud as it is. We're going to build an infrastructure layer that sits in the middle. That's by a company called Quant, the tech provider we've decided. They will provide programmability, smart contracts. Oh, we're going old school. Okay.
Set that later.
Right, let's try that. So Quant will provide the smart contract functionality, the programmability, the fungibility between all our different types of tokenized deposit. So we've been on that journey, as I said, for 3 years. We are looking to pilot next year pilot will be 3 core use cases, and it's important because this brings it to life, because most people sit there and think, why would you bother? We have smart contracts really with APIs. Open banking is just a way of making money a little bit smarter, and we're a big open banking player, so we've thought that for a while. But the peer-to-peer one I'll bring to life. So imagine an escrow service, but without the need for escrow, where you can effectively lock and earmark your tokenized deposit only when the payer and payer are happy that the goods have transferred hands and everything's satisfactory. You can basically swipe and that moves the money instantly 24/7. So there's kind of a fraud mitigation play. In the mortgage one, think of, we've all moved house or remortgage, you're sending your money to a solicitor, you're paying a chaps fee, they're sending it on, you're paying a chaps fee, lots of chaps fees. Any solicitors in the audience, I do apologize. Can we remove them from the money flow, right? So solicitors are super important in the journey for changing house, but are they really needed in the money flow? Probably not. And the wholesale one, lastly, cap markets have moved in a tokenized manner for the past 5-10 plus years, but there's never been a cash leg on chain that's really been readily accepted 24/7. We're hoping that tokenized deposits become that cash leg. Treasury are looking to do a digital gilt digit sometime next year. There's absolutely no reason why a tokenized deposit couldn't be used as the cash leg to settle digit and any other digital bond. So they're the 3 core use cases, and that's the work we're on with GBTD.
Excellent, and that's obviously closely related with Project Agora, which we're both parts of. So Project Agora is the biggest bank of international settlements project to date. It has 7 central banks and about 40 financial firms, including us, our competitor, and SWIFT, and it's exploring, again, the tokenization of these traditional money forms, so central bank money, commercial bank money. And the way I look at a lot of these topics is from the lens of settlement innovation. So today, a lot of, particularly in the international payment space, it's run through correspondent banks. There's, it's not possible to settle all the time due to operating hours of the banking systems in each market and the central banks. And can we get to a world where the tokenization of those assets means we can have the 24/7 commerce that we're working towards? We could quickly mention the SWIFT initiative as well as kind of related.
Sure. Yeah, so we're obviously a member of SWIFT. SWIFT is a kind of global community of banks, maybe about 11,000 banks. Effectively, it's a messaging service, but it's the way we move money across the correspondent network for all our core corridors and currencies. SWIFT are actually round the Agora table as well, but SWIFT very recently announced a couple of things. One is a kind of scheme-led improvement, so how can you improve the customer experience into our mobile apps through mandating things like what you can show from a transparency perspective, from a pricing perspective. But where my interest was piqued from a digital asset lens is they are building as well a clearing and settlement layer. It's called the digital concept, which, if I'm being brutally honest, is very similar to what Agora is trying to do. So I think there needs to be a marriage of those two at some point. But at this moment in time, they are separate initiatives. But again, it's very much looking at how can we improve money movement cross-border. Cross-border is, I think, always been, not always, but recently been unfairly beaten with a stick that says every single transaction you send cross-border takes a week and you've got no idea where it is. It is completely untrue. 90% of what goes through SWIFT is almost instantaneous or same day. There are edge cases, but there are edge cases in domestic payments as well. And this is not me being an apologist for SWIFT. I think they need to do more and do better. But at the same time, we need to recognize that actually we've made a lot of improvements in this space, but we can do more. And that's where I think if money is moving on chain, we should look to do more on with our money, commercial bank money, to improve that. And that is where it does become a bit of a tokenized deposit versus stablecoin debate/battle. I'm not necessarily sure who wins, but if you look at stablecoins as kind of bearer instruments, so they retain the kind of ownership, they make a lot of sense cross-border because they already have fungibility, especially if it's dollar. Where the challenge comes is if you're on and off ramping into different countries, if you've got an FX element, that's where it becomes potentially quite difficult. And we need to try and solve all that through Agora and through SWIFT.
Yeah, I completely agree with all that. And I think stablecoins are in a really interesting part. And we mentioned the Andrew Bailey op-ed in the FT. I highly recommend reading that. And I think if you think of when I learned economics at university, fiat currency was closely linked to the state, right? Commercial bank money has got the backstop of the lender of last resort, deposit insurance, all these sorts of things. If Andrew Bailey is signalling that there might be some evolution for stablecoins there, perhaps they will become more into the regulated system, become more of a regulated liability, however with different characteristics, as Lee's already mentioned. We also had a Cybos announcement. We've got a Visa Direct pilot where we're allowing for a very small pilot, but about pre-funding with stablecoins for cross-border transactions. So there's a lot of executive and internal interest on upgrading the Visa network for these future digital assets. I think the ledgers are really interesting. I think there is space for a kind of a clearinghouse model between these different assets. So I'm still very interested in what Tony McLaughlin is still up to at Ubix. So yeah, we're watching that. So really fascinating, all these developments.
Yeah, the Bailey speech was interesting. Again, I was at Cybos when it landed, and it gained a lot of noise, and I've read it a couple of times now, because the Bank of England have been criticised recently of being too negative around the whole stablecoin market. I think the Bank of England are probably a bit scared of the unknown of stablecoins, and this isn't really a payments debate. It's like an economics, monetary sovereignty debate. Stablecoins have grown exponentially, but they're primarily for movement into the DeFi world, or they're actually dollar, or is already the primary currency, where countries have volatile fiat or people can't get access to accounts. Stablecoins have kind of proliferated there because there's a need and it's improving the experience. But in domestic markets like ours where we're digitally mature, we have instant, we have card, etc. I struggle to see where that proliferation will come. The Bank of England's response, I actually read Bailey's thing and actually said he's not saying nothing new, to be brutally honest, other than maybe the insurance side. As banks, we're not allowed to issue stable coins under our core brands because there was kind of confusion between, back to my customer point, would they get confused around the FSCS protection that you get and whether you get that on a stable coin or not? So that was different in the Bailey speech because he tried to hint towards insurance. But ultimately he was saying we need an appropriate regulatory regime that allows for the linkage of money and credit creation, because that's all banks do, right? We'll move money, hold money and lend it. That's it. That's how the economy grows. We'll lend out into the economy, supported by the central banks as well. When that starts to get impacted, then actually the world we know and the world we love and the growth in businesses that we see becomes impacted as well. Banks will need to go to different markets to get funding, potentially makes it more expensive. And the Bank of England, I think, are quite worried about that. So I didn't see much difference in what Andrew Bailey said. Sarah Breeden, on the other hand, so one of the deputy governors, came out the other week and talked about a multi-money future. And I think the core message for me of that is interoperability. How do we ensure that actually if someone's using a stable coin, but actually then someone doesn't accept it, they can interoperate to change between the different types of money? So back to my experience point, their experience isn't negatively impacted.
And that's the whole singleness of money concept you might have heard of, that basically pound in your pocket, whether it's a stable coin denominated, a tokenized deposit, it should all be the same, equally at par value.
Yeah, a pound is a pound is a pound.
We've got 1 minute 52 seconds apparently. Brilliant. So I'm not sure we've got time to do infrastructure. You kind of mentioned it a bit.
I mean, I can do it in 20 seconds, right? So UK payment infrastructure is facing a potentially fundamental change. We've got the Bank of England stepping into more of a strategic role. We've got the Payments Vision Delivery Committee, which is all the regulators sat in the same room now, which is great. Below that, we've got a new body, an infrastructure body being set up that people can pitch to be on. Then you've got a new delivery company that will look to deliver new infrastructure. My worry is the pace of chat in this industry is relentless, but the pace of doing stuff is not. And so I don't want us to be just talking and talking and talking, and then we fast forward a year and actually all my views here about stablecoins maybe not coming to UK are just wrong because we've not done anything to try and upgrade our infrastructure at the same time. So we need private and public partnership, and we need to progress at pace.
I remember the point I was going to make just previously, that I agree with you about the UK market internally, and we still got to remember that the vast majority of usage for stablecoins are to interface with the crypto markets.
Yeah.
I don't know the exact percentages, but it's still the vast majority. So there's still a long way to go for stablecoins to get break into kind of real world money movement use cases. We've got 30 seconds. Should we do a couple of questions, if that works for people? And I think, are we the last ones before lunch as well?
Yeah,
sorry.
just one question.
One question.
Is the microphone? Sorry. Thank you.
Hi, that was an incredibly illuminating dialogue there, so thank you very much for that. Not sure I understood everything, just to be very clear. I mean, this is a very new area, I think, for all of us. But in this multi-money interoperable future that you're describing, right? That's kind of the future of cross-border payments as you're describing it, right? In collaboration individually as NatWest, Visa. Where do you see fintech playing the most impactful role in making the biggest impact in society, right? Where can fintech really wedge in and really kind of drive that impact? Is it interoperability between different currencies, going into stable coming out of stable coins? Is it in the security layer? Is it in terms of how you actually transact? Where do you see the maximum impact?
That's a great question. I think the answer is all of the above. And if I'll apply it to what we see now. So we already see likes of Wise, likes of Revolut, hugely disintermediating banks from an experiential perspective and taking a lot of flows. That's great because it encourages competition and innovation. But equally, across the full value chain of how you move money, whether it be domestically or internationally, you'll see fintechs in every different part of that. Like we're a huge investor and supporter of a fintech called Icon. One of them's in the crowd here, so I sit on their board. But we've invested in them because they're better at doing certain things than we are. So across all that different value chain, as a big bank, we might have, say, 100 million to invest in 10 different parts. But the fintech, there's lots of fintechs in each of those 10 parts. They might not have the same kind of investment, but have got enough investment to make it experientially differentiating for us, whether it be tech, whether it be customer experience, whether it be infrastructure, whatever that might be. The encouragement from a big bank is we are open for partnership and collaboration. If you open an account with NatWest, you've gone through 7 or 8 fintechs, I think, to get to the point. You might not see all of them, but you've gone through that fintech experience to get to the point of opening, because gone are the days when the big banks say, oh, we'll do it all. It just doesn't make sense anymore. So I think the answer is all of the above. Try and work out where the differentiation is, or actually you could do something very focused so that actually all the banks will be able to consume, and it kind of makes your business model.
More on the experiential differentiation side?
Well, experience is different. Are we talking about customer experience? Are we talking about banks experience? Experience kind of applies across that whole part, and I would say equally the opportunity is across all that value chain as well.
Well, thank you very much.
That's all right, and good question, that.
Can I? We've had a question online. Can I just relay this?
Sure.
Someone who's been very loyal to Stage 2. In a previous discussion, the chief executive of Coinbase UK was here, and he was saying the UK has 12 months to fully implement stablecoins or just become an also-ran. Fair?
Become a what, sorry?
An also-ran.
Okay.
He's got 12 months or the UK will be left behind. That was his comment? Fair?
Your turn to answer, Alex, I think.
My view is, I disagree with that view. I think that we've got to, obviously the UK is building its regulatory framework, which will be implemented in the next year. We spent part of this chat already talking about the shifting stance of the central bankers slightly as well. I think that as well as the regulatory framework, the UK market is dynamic for a number of reasons to do with our legal system, our access to talent, our time, so I don't see it simply as just regulatory challenges. I think it's actually much more interesting to look at it as a digital asset upgrade more broadly rather than simply just stable coins. Actually.
Yeah, I think it's great to be provocative. As an industry, we shouldn't agree with each other because ultimately that's what makes competition innovation. But I don't think it's as binary as if we don't do something, we'll be obsolete. But I do think the UK needs to start making tangible progress in this space, 100%.
Well, that's something then that you all agree on.
Yeah, absolutely.
Which is a corking way to end. I'm sorry we have to bring this to a close, but that's been a great discussion. Alex and Lee, thank you very much indeed both.
Nice, thank you.
Thank you.